Everybody, how you doing, Warriors? This was a big week because we had a couple of inflection points that occurred. In my view, looking at this weekly move in the dollar, we have a low. Okay, remember earlier in the week I was saying the whole world was looking for 95. Okay, and this formation would have even come in lower, 94.29. So what happens when there's universal agreement upon a number, whether it's to buy or sell, this is what usually happens. It either never achieves that number, or if it does, it ends up being inconsequential. So I'll say people that are still waiting for 95 to be a buyer in the dollar, that it's not going to be magic if it happens from here because the dollar made it stand. It did what it had to do, shake out every bull first, right? Here's the daily again, took out the July low, right, which was what was that low? 96.30 was the low there on this day. So that was a low to move. And we went to 95.80. So we cleaned out all the sell stops, right? So all the dollar bulls probably panicked here. And we're on the verge of a reversal week. Closing over 98 is going to be big. And I will be looking to finesse long positions on pullbacks. And I think there will be one. Most Elliotticians would say we need the market to close over 98 to declare it. I'm declaring it now by the move that we had and the fact that there are record shorts in euro and the COT. 20 years, we haven't had this level of bearishness, and I think this is going to be the squeeze that's going to take us up to and a conservative target for me is up around 102. So, what would that translate into? My preferred short is cable. Okay, cable never took out this high. Euro did, right? And the euro doesn't look great, but my preferred short is cable because euro pound looks good. Looks like it's headed higher, almost at new highs. So also cable, even though the stock market's still blowing off, is more susceptible to risk off. So I still think we're going to have some risk off. It may not, the top may not be here till next week. I'm going to show you exactly where it held too. So when it comes to dollar pairs for shorts, it's cable. I'll be looking for some type of retracement. Maybe we could, that's not cable. Maybe we could rally back towards 136, and then I could be wrong over the high of the move. Okay, so I'll be looking for that next week. The dollar long pair, the yen. Now you guys know for weeks I had this line in here which told me I was going to be able to buy it around 105. So I mean, a lot of people were probably looking for 105. I didn't get my 105. Am I going to wait for 105 and say I think it's still going to go there? No, and the main reason I don't think it's going to go there and I know I need to buy breaks was what manifested on the yield side. And I've been saying for a couple of weeks that we were putting in a bottom on the 10-year around 4%. We had a nice little three drive, a little stop hunt here. It was not really that deep. We really need to clear 420, but I'm going to give this the benefit of the doubt that yields may have bottomed here as well. I'm not saying that we can't pull back, but as long as we stay above 4%, all right, that's my bull bear line in the sand. You have to be open for higher yield. So maybe yields pull back and the dollar pulls back, and I would use those, to go with the trend. In fact, if we start getting through 420, when I look at this huge triangle that we have here, shows up better on the weekly. If this low is real and we start getting through 420 and then 430, we're going to go to the top of this triangle line, okay, which is going to come in up around 470, which sounds completely ridiculous with the employment picture getting a little bit weak. But let's remember last time the Fed eased, this happened. So it's not just the Fed, it's the market. So is the market worried about an easing cycle with the stock market all-time highs and gold at 3,600 and silver in the 40s and the dollar having the most precipitous decline? Yeah, you bet I'd want to get paid more to hold paper. So the bond vigilantes might not be happy about, and maybe that's why we had a hawkish cut because Powell knows this. So this could end up being what upends the whole apple cart if this scenario works out and we break out over 470. Uh, you have at least the width of the formation, which is 120. That would take you up near 590. Okay, so this is a very contrarian outlook. I talked about buying the rumor, sell the fact in TLT, that we had a 3 drive there, take a picture. So this also is going to tell the story, this breakout at 88 and a half. If you like bonds, you could buy them here and be wrong under the breakout. Maybe there is, maybe I'm wrong. Okay, maybe the Fed's way behind the curve and um, bonds act better. But if we take out 88 and a half, and it's not a good look on the weekly, even though we're recovering today, then I think we could be talking about new lows for the move in bonds. So we'll see. I mean, the formation never reached its potential. Its potential is like 93-ish, 92, 93, because this was 5 handles here. So you make it, you know, 93 and a half up near these highs. But if we're failing here and it's a lower high and there's a gap from yesterday and we negate the breakout, say goodbye to 83. Okay. I also just want to comment on the metals are becoming more two-way. People are more willing to sell gold. I know it's rallying today, and it could attempt to make a new high if the dollar pulls back, but it's starting to look heavy to me. Look at this last RSI. So we're holding the support. If it makes another new high, you're going to have a 3 drive. Similar situation. Silver's acting a little better. But I think if I'm right after this pullback in the dollar, wherever, say, for example, we get a 61.8 pullback in the dollar, and then we start heading up again, that would be something like 97.80. This was 160. So halfway, this was 96.20. Yeah, 160. So 80 back from here would take halfway's 97, 61.8's about 96.80. So I'll be looking at stuff there. Also looking to buy the break in yen. I don't think we'll take out 5.5. Quick look at nat gas is under pressure. There was a nice rally to take it in, but I'm going to stay with it. I'm still risking the lows. Maybe we have to trade 280 again. The oils are down again, so I'd get out under 72. So I've lost a little confidence in this energy trade, but this still could be corrective and a break to buy. 78.6, which would be the lowest, I would buy it, but would try it at 275, and then you just risk the lows, another 10 cents. Um, I think that's it. We have S&Ps beginning to diverge on the 4 hour. If we make new highs, it's diverging, but momentum's pretty stiff. So maybe one more new high towards 67. I have some smart viewers. I don't know who you were, but earlier in the week when I was attempting scalping the short side of S&Ps, you wrote in the comments 6705. And that looks like we could be there next week. And remember, next week is the change of seasons, so that's a GAN thing. We have the equinox, and we also have an annular solar eclipse. So maybe the market's going to rally into that inflection point. So that's it. We have some important signals. So get ready, okay? Because, there's some nice downside targets. 110 in the euro, under 130 in cable, 62-cent Aussie. So put your dollar bull cap on and get ready to buy breaks next week. But most of all, and I'll see you in the room, don't just count your pips, count your blessings. Adios.